So is this a good time to buy the dip?
There's another phrase which is very relevant here. Don't catch falling knives.
Fair enough.
So this is a falling knife right now. And you don't want to catch it and sort of cut your hand in the process.
So you're saying it's going to go, the prediction is, right? I'm assuming the numbers are going to come out for the last quarter and it's going to have no airport lounge revenue over there. This episode of Taking Stock is brought to you by Paterson. Hello and welcome to another episode of Taking Stock. This is a weekly podcast where every week we pick one company, one stock and dive into it. And this week we're talking about DreamFolks. Right now, my first question, and this is a very interesting story because I think everybody who's listening, everybody who's been to an airport or taken a flight has interacted with DreamFolks in some form or shape or the other, right?
Yeah.
And my biggest question here, or something I want to start this podcast with is, how does a monopoly go broke, right? When you've got what you normally assume is that competition is what brings you down, right? But when you've got no competition, DreamFolks was a monopoly in the airport lounge sector, and its stock has gone down to almost 1/10 of its all-time high. Please elaborate.
Yeah, I mean, it's very typical to assume that monopolies are great businesses and they do well and they have longevity by them. But I think the one thing to note is that if it's a monopoly and has a moat, then it has longevity.
Correct.
But if it's a monopoly that is created out of sheer situational aspects, then the longevity may not really last.
Because you're open to competition coming in at some point.
Yeah.
I'm assuming, right? But there's no barrier to entry.
So, and I think, I mean, that's not the only factor. The other factor is also control of the entire supply chain. So
okay, one second. Let's start. What is DreamFolks for people, the uninitiated? What is DreamFolks? How did they sort of become so big?
So DreamFolks is essentially look at it as a aggregator.
Okay.
Look at it as a platform, right? Now, platform usually has two sides to it, right? You take an e-commerce platform, it has sellers and it has buyers. They are facilitating. Look at DreamFolks as similar, but for airport lounges. Now, airports.
But who were the two parties they were sort of connecting?
So the airport lounges is the one part, which is your supply.
Okay.
Right? Airport lounges are typically all across the country. Multiple lounges in the same airport also at times.
Right.
And they're operated by someone known as lounge operators. So these are guys who are sort of doing the catering, they are doing the interiors, they are managing the entire lounge, right? So these are hardcore lounge operators. Now, lounge operators are the supply. The other side of the equation is banks and credit card companies.
Okay.
So banks and credit card companies are usually giving their customers perks, privileged customers, or now several massive customers, that, hey, with this card, you will get free access to this lounge. That's a majority of that, right? Now, DreamFolks on the other side is partnering with banks and credit card companies. So look at it this way. Earlier, there were multiple lounge operators across the country, across different airports. They can't go and strike deals with different banks and credit card companies individually and get access to their customers. So DreamFolks said, hey, you know what I'm going to do? I'm going to facilitate deals with everybody at the same time.
Organize this entire market.
Yeah. So put a platform in the middle, put a tech stack. They have relationships on both sides and they just sort of aggregate it.
Right.
So that's where DreamFolks came in. They didn't operate, or they still don't operate any of the lounges. They are just a platform that lounges get onto.
So they were essentially a mediator, right? Between the lounges and the banks. And they sort of help broker the deal between the banks and the lounges, which the banks then passed on to their elite customers or whatever, premium privileged customers, etc.
So it's like a four-way deal here, right? So imagine this, and customer can also walk in separately and pay $2,000 and get the lounge.
Correct.
Right? That is one option, but people don't exercise it because they have
usually get a card or whatever. Yeah.
So what happens is a customer is walking into a lounge. He's walking in for free. You're paying that ₹1, ₹2 for verification or whatever. However, as soon as the walk-in happens, the credit card company is actually paying the lounge operator anywhere between 1,000 and 2,000 rupees.
Right.
Per person, per entry. Right.
So the credit card company or the bank essentially is bearing the cost.
Yeah.
which is sort of like a marketing cost or a privilege cost that they're giving.
Or it's part of, see, a lot of credit cards also have an annual fee.
Right.
They're sort of just taking it,
Yeah,
but
they
the
call
customers
them
don't.
twice, they waive it off for you. Yeah.
Yeah. So credit card company is paying 1,000 or 2,000 bucks to the lounge operator. Now, because DreamFolks comes in, what happens is customer walks in for free. Credit card company pays 1,000 rupees, let's take for simplicity, plus a 15% on that, because DreamFolks is aggregating the entire thing and whatever, and pays that amount to DreamFolks. Now, DreamFolks will pay 1,000 to the operator. So he's just mediating in the middle, right? And then the operator at the end of it, what is the operator's business? They get this steady inflow. They have to manage their cost within that, right? Which is your supply, electricity, rental. Rental is what they pay to the airport.
Right.
And your F&B cost, which is food and beverages. Again, if you have a buffet system and all of that, that gets subsidized. That gets, so they make profits in turn. So this was the whole model. And hence, DreamFolks, even if you've come across by going into a lounge, you've not gone into a lounge that is operated by DreamFolks. It is only facilitated by DreamFolks.
Right. So I mean, I'm assuming DreamFolks is also the one behind, because I might be getting the number of years wrong, right? But there was a time where lounges were very premium and elite, and only very limited credit cards and limited people would enter the lounge. And over the last maybe 4, 5, 7 years, we've seen a deep premiumization of these lounges, where literally it's become like a train station today, right?
Yeah.
Where today the privilege is to not go into a lounge and sort of wait outside or wait somewhere else. And then now you've got these multiple lounges coming up. So I'm assuming what DreamFolks also did was made it accessible for everybody.
Yeah. So because so they could achieve scale in the model. Let's put it simply, because rather than they could standardize a lot of things. They could strike partnerships with ICICI and say that all these lounges you get access to, these customers, these type of credit cards. That's why they keep checking the card list and all of that. So these guys were able to facilitate the entire ecosystem in such a manner that it could grow multifold. Now imagine this, like in FY22, and you're right about the 4-5 years, because post-COVID is when the boom happened.
Correct.
So FY22, which is basically calendar year 21, which is post-COVID, these guys were doing a revenue of about 284 crore.
Correct.
DreamFolks, which is taking the 15% cut, right? So the overall lounge spend is about 284 divided by 0.15.
Correct.
That's the overall lounge spend. Now, cut to FY25, which is just 3 years later, their revenues have grown 5x.
Okay.
And they were at about 1,300 crore in FY25.
Right.
So effectively, they would have facilitated in
5x number of people, or 5x, the footfall into these lounges have increased by about 5x. It's fair to assume.
Assuming pricing remains steady, but sure, why not?
Yeah. So yeah, that's a lot.
So if you see an airport lounge with 5x the amount of crowd, you know who to blame /
credit.
The way you look at it.
So I mean, what you're saying right now sounds very positive, right? That DreamFolks add about 283 crores of revenue in FY22, and it's crossed 1,000 crores 3 years later in FY25.
Yeah.
So what went wrong then?
So see, platform businesses work beautifully where there is fragmentation on both sides.
Right.
However, if you've got lesser number of suppliers or airport lounges,
right,
the airport lounge will think, hey, why am I paying 15% to this guy? If the airport lounge itself or the airport or some other party can
unionizes the whole thing,
or gets everybody into onto another platform, then the 15% can be saved.
Correct.
And that's exactly what happened.
Okay.
So this was triggered primarily by Adani Group.
Okay.
So Adani now owns
most of the airports.
Not most. They own about 8 airports in India.
Okay.
But they own key airports. So because it's still 8 airports, they control about 25% of the air traffic or passenger footfall happens on these 8 airports. And another key player is GMR. So between GMR and Adani, they control about say 5 of the top 10 airports in the country.
Right.
Which is roughly half the
passenger footfall. Yeah.
So they control most of it. Now, what happened is Adani, if you look at, if they own the airport, they want to squeeze every bit out of it, right?
True.
So one of the sources is obviously aviation revenue, which is your parking charges and facilitating aircrafts and blah, blah. and the other is F&B and a lot of services that are around and built in the airport.
Right.
Naturally, if you want to own the airport and it's a private company, they will look at maximizing profits from here. So they had a strategy where they started ramping very hard on the
extra revenue.
Non-aero revenue. Non-aero revenue, for example, for them could be about half of the total revenue right now from the airports. But it's projected to become 90% of the revenue at some point in time.
Okay.
So that is super aggressive.
So you're going to have an amusement park in the airport. It's
I mean, look at Singapore.
Exactly. I was just thinking of that. It's not very far away where you have movie theaters and everything inside the airport.
So basically, the move was triggered then by Adani, where they said that, you know what, like if I own the airport, why do I need DreamFolks to facilitate all this? So instead, what they started doing is they took like 2-3 steps. One is the airport lounges. Now, most of them were owned by, there are 3-4 very prominent names there. There is one called Semolina Kitchen, which is actually a subsidiary of a company called Travel Food Services. Now, these guys own Copper Chimney, Bombay Brasserie, Irish House, that
big hospitality group.
So they owned Semolina Kitchen. And there was another one called, so there's Encom, if you've seen, which is Delhi and all those. So there were 2-3 of these very prominent companies within that space. Adani, what they've done is they've sort of gone and acquired majority stake in the lounge operators itself. So now Adani owns the airport. Adani owns the
lounge, essentially.
Lounge operator as well. I mean, owns the lounge and operates it. So rather than saying that I will lease the space out to a lounge operator, Adani will itself operate the lounge, and hence the lounge's profit margin also becomes Adani's. And then they go like, hey, then why do I need an aggregator?
Why am I paying the extra 15%?
Exactly. So then they developed their own platform, which facilitated the transactions or which mediated between the banks and credit card companies and the lounges, which are their own.
Basically, exactly what DreamFolks did. Right, they essentially created a parallel platform and that does exactly what DreamFolks does.
But they also cut the value chain out short. So earlier, for example, the value chain was customer, aggregator, lounge operator, airport. Now it is customer, Adani. So essentially, that's the change in the ecosystem that has happened.
So every time you take a flight, you know who's making money. Or every time you walk into an airport, we know who we are paying.
So that's essentially what happened. And see, Adani had done this so here's what happened with DreamFolks. About 90% of its business came from domestic lounges, right? Aggregation of domestic lounges. What got triggered in the middle of 2025 was that Adani sort of said that for the airports that Adani owns, the 8 airports and 25%, Adani said like, hey, DreamFolks, bye-bye, ending contract, it's mine now.
Right?
Next, what happens is that even Encom sort of ended the contract with DreamFolks. And this was somewhere in November 2025. Now, basically, this has led to not just the 8 airports changing the model, but all the airports sort of saying that now we don't really need DreamFolks. So it was a much more sort of...
it was a better proposition, essentially, that Adani offered.
So either Adani offered or people sort of built their own platform. So now there is like about 3 platforms running parallelly.
Understood.
It's not just Adani Digital, but also a couple of more platforms that the lounge operators...
And DreamFolks, I'm assuming, is also still running. At a much more...
No. So DreamFolks said that we are plugging out of the business completely now. Because Adani Digital is one, they've got a platform called Lounge One. The second is Encom or GMR. In GMR's airports, they did the same thing. That is a platform called HOI. I don't know, is it HOI or HOI? I don't know. But that's the second one. And TFS, which was again Semolina's parent, that operates 37 lounges separately. Now, those 37 lounges also said that we are building our own platform. So that's called Elite Assist. So basically,
it's just a fragmented market now, essentially.
No, now there are 3 platforms instead of 1 platform.
But
everybody's got their own tech stack and they're dealing with the banks. So what happened is not only did the lounge operators plug out, but also a few of the banks plugged out.
Right.
So ICICI, Axis, a couple of others sort of said that, hey, you know what, we are also plugging out of the system. So basically, DreamFolks has come to a point where 90% of their revenue model is now bust. It's gone.
Correct.
There is no need.
Right.
They've stopped the business. And because this happened in November, from July to November.
July to November 2025.
Yeah.
Okay.
So even this quarter's numbers will reflect some amount of that revenue.
Right.
Because it's still sort of in
November,
the last stages.
Yeah.
But it's on a declining stage. So you won't see that revenue coming in the future.
So what does DreamFolks do today then?
Interesting. So
yeah, I mean,
no. So they had a little bit of 90% was domestic lounges, right? They had another 10% also.
Okay.
So in that 10%, they were doing a bunch of other things.
Okay.
And that bunch included a little bit of international lounges. Then they had a little bit of other services which are around airports. So airport transfers. There's something known as meet and assist. Basically, someone will meet you at the airport and then assist you through check-in, boarding, etc., all the way till the end.
Human Digiyatra, basically.
So that, then whatever. So those baggage will come straight to your hotel, blah, blah, all those services they had. So that was still 10% of the revenue. Now that is existing. But obviously, DreamFolks is not going to be happy with saying that I'm at 1/10 of my size.
Of
and
course.
They're going to try and recoup and come back to levels that they've seen earlier. So they're doing a bunch of other things now.
So essentially, DreamFolks right now, so I mean, when we first started, we sort of established that the stock's gone down by about a 90%, right? It's gone to 1/10 of its all-time high value. So revenues also, I'm assuming, down to 10% of what it used to be when it was at its peak, right? So DreamFolks essentially as a company is now bleeding money.
Yeah. But see, also, because you have to also understand that they were a tech stack, right? At the end of it, they were mediators.
Right.
So if they were operating lounges and they had costs associated with running it, then they would have been at a much bigger loss.
Right.
But here, essentially, they're just grabbing a commission out of the entire deal.
So it's just scaled down completely.
Yeah, it'll scale down. So it has scaled down. So if you look at overall, if I look at the 2Q numbers, right, that's the last they reported. They reported about 200 crore, I think. I've lost that number somewhere.
But 200 crore from the peak, which was 1200 crore.
No, this is quarterly revenue of 200 crore.
Okay.
Which is sort of down, but not really evaporated. So let me just give you context there. Out of the 200, about 180 crores is lounges. So it is still there.
Right.
The rest of the revenue is about 27 crore on a quarterly basis.
Understood.
So what will happen is, over the next 2-3 quarters, this 180 will become zero.
Correct.
And the quarterly run rate will be about 27-28 crore.
Right.
Which is now the space which needs to expand.
Okay.
So what they're doing is a bunch of things. One is focusing on global lounges. So basically, they've gone and said that we are tying up with a lot of lounges in Southeast Asia and Middle East as well right now. But they'll do it across the globe. And within 1 quarter of doing this activity, they've been able to double the transactional volume on international lounges.
Okay.
However, you must understand that the base is also very small.
Right.
It's barely 5% or 10% of their total revenue.
Correct.
Which is 27-30 crore on a quarterly basis. So that is something which has the potential to grow, however. The only peril I see here is that they're still doing this. So they're not basically replicating the India model abroad. What they're saying that, see, bank partnerships are already there. They have ICICI, Axis, HDFC, everybody is a partner already. They're saying that, hey, to your customers, we were earlier giving access to domestic lounges.
Now we'll give access to international.
Now we'll give to international also. Because if I go to, say, Thailand, for example, I'm lost. Unless I have priority pass, I can't enter.
Correct.
But how many people have priority pass?
Yeah, true.
So then these guys are sort of proposing that, which is a solid proposition. But the problem is that you have lower number of people going abroad, right? Your total.
But it's increasing now, isn't it?
Increasing, but then
you can't compare it to your domestic travel footfall or whatever.
So it can grow multi-fold, but it'll take some time as well.
Correct.
So that's one thing they're doing. Second is they're continuing to focus on travel, but other modes.
Okay.
So like they were dominant in the air travel business. Now they're entering railway lounges.
Okay.
And they're entering highways also. So now
Okay.
the credit cards companies will say that, hey, if you're going by train, for example, now train stations will also have
Have a
lounges,
lounge.
and you can go into those for free.
Right.
Or if you're on a highway, say you're doing Mumbai, Pune, or Bangalore, Mysore, or whatever, there will be some restaurants on the way, which again these guys will tap into and say you get a free meal there.
Understood.
So that's what they're tapping into, which is also a brilliant idea.
It is a great idea. I think it's a behavioral change that is expected, essentially.
Yeah, but if it can happen that quick with airports, it can happen that quick otherwise as well.
Basically, people will go wherever there's free food. Right.
Yeah. But the only problems with that model is that compared to airports, these are lower ticket size. They have lower wait times. They have lower sort of demographic constituents as well. So air tickets are much more expensive compared to these modes of transport, right? So how much you're spending, if you're spending 1,000, 2,000 as a credit card company, if you have to reimburse 1,000, 2,000 bucks on an airport, it's going to be much lesser here.
Correct.
Like look at the price of a Starbucks on an airport versus on a highway.
Yeah.
It's way different. So from that angle, they may be, I mean, it's an incremental market for them, but it's still something that will lower maybe. So global lounges, they're doing other travel modes. The third thing they're doing is beyond travel as well. So they're saying that basically lounges are a lifestyle solution, right? So they're saying that we'll get into more lifestyle solutions as well.
Okay.
So, for example, there are a lot of private clubs which are social clubs like your gymkhanas or whatever, which are very member only.
Correct.
So these guys are tying up with those and saying, let credit card holders get free access to those.
Right.
Let them get gym memberships. Let them get golf course accesses.
Right.
Let them get coffee when they're at a third wave, for example.
Correct.
Beauty and grooming, wellness, spa. So basically, they're saying that same card, instead of it offering a lounge access, it will offer lifestyle,
a bunch of lifestyle other solutions or things that can help, which act as a lifestyle product essentially, right?
So they're launching that. They're getting into that very aggressively. So that is basically just partnering.
But I've got a tangential question, right? And again, it might be very elementary, but the thing is that they're going back into the same business model, which kind of got evaporated earlier. So what stops it from going back down again?
No, because this is going to be fragmented on both sides, right? Your problem was that there was concentration on suppliers.
Right.
And if somebody had a monopoly on the base infrastructure, which is airports,
they
could upward integrate and hence capture that market. If you're saying that I'm going to provide lifestyle services across the country,
so then you're dealing with multiple suppliers.
Yeah.
So you're dealing with whatever, restaurants, spas, clubs, train stations, highways, etc. Okay.
Unless you tomorrow say that all train stations are going to be operated by Adani as well.
Right. Very possible.
So if that is a possibility, then you're looking at that as a
correct. They must be getting nightmares of Adani.
Yeah, and the fourth thing is they're also sort of diversifying on their client base, which is saying that earlier banks and credit card companies were the only clients. Now they're tapping into enterprises as well. Say, for example, TCS or Infosys have a few lakh employees.
Right.
They're saying that how can I tie up with a TCS or Infi or any other large company and either give their customers or their employees benefits on their platform.
Understood.
So you will get probably from Paterson, you will get like a card, right?
I'm
like
waiting.
A DreamFolks card.
And when I'm on the highway to Chennai, I can have a free meal.
Yeah. In fact, that the lounge, right? The train lounges that we were talking about, they acquired a company called 1011.
Right.
And they have 3 lounges basically. One is in Mumbai, Vadodara, and one in Chennai.
Okay.
These are the railway lounges.
Right.
So when you go to Chennai, you'll get that benefit on the train as well.
Okay, so the question that I have here, right, is that the stocks at an all-time low currently, right? And we always say that go in before the story plays out or whatever, buy the dip or however else you want to phrase this term, right?
Yeah.
So is this a good time to buy the dip?
There's another phrase which is very relevant here. Don't catch falling knives.
Fair enough.
So this is a falling knife right now. And you don't want to catch it and sort of cut your hand in the process.
So you're saying it's going to go for, or the prediction is, right? I'm assuming the numbers are going to come out for the last quarter and it's going to have no airport lounge revenue over there. So the numbers are going to go further down, which means the stocks predict it to go further down?
Yeah, I mean, see, 200 crores they still did last quarter because of lounge business still being 87%
Right.
of total, right? Now that 87% is still going to come down to zero.
Correct.
Your 13% will grow. It's already on a small base, and see, they're not starting out from scratch.
Right.
They have bank partnerships in place. They know what they're doing. They have the tech stack in place.
Right.
They have to expand the tech stack and make it more flexible for more customers and more suppliers.
Correct.
So on both sides, they have to do their business, right? And that's why they could even expand the international lounge business so fast. So basically, I think they've got a tech stack ready. It's just about when that 20-30 crore will
scale
catch
back
up to
up,
200 crore,
yeah.
right? Which is obviously going to take time. It's not a joke for someone to grow their business 10x.
Right, of course.
Case. But here's how I'm looking at it. Right now, so the sustainable revenue they have is about 30 crore per quarter, right? Now, even if I have to sort of say that 30 crores will mean about 120
a year, yeah.
Say they ramp it up aggressively and make it even a 200 crore per annum in year 2.
Right.
On that 200 crore also, this business roughly, because they're mediating, fetches a margin of about 5 to 10%.
Okay.
And anyway, because now there's a lot more partnerships required, there'll be more manpower, higher gestation period, lower ticket size, etc., which will make the profitability longer.
Right.
So assume they do 5 to 10% net margins there. They'll get about 15 to 20 crore in profit.
Correct.
On 15 to 20 crore in profit, if you give it even a 15 times multiple, for example, and Nifty is trading at say 22 times. So a discount to that because this is a tragic situation.
Correct.
So it's a bet you're taking. So even if you give it like a 15 times random number, you will come to a valuation of about 250 to 300 crore.
Correct.
The current market cap is 550 crore.
Right.
So
it's almost double of where it should be.
Could be. It's still a little more than double of that.
Correct.
Not a little more, but around a little.
Right.
The other way of looking at it is saying that, see, the business is gone, but I have my balance sheet, right? So I'm going to look at what assets the company has, what liabilities it has, and hence what the net worth is.
Correct.
Basic asset minus liability, what is the book value of the company? That comes to about 333 crore.
Okay.
Which is higher than the biggest method, the first method, right? So the second method, which is plainly stripping the balance sheet and saying what is the base value of the company, it should be about 333 crore.
Correct.
You're still at about 550 crore.
Right.
So I think it's a falling knife till the time either of these two situations play out.
So you're essentially saying, without giving too much away, that there will be a right time to buy the dip, but it's not yet.
Yeah, and that right time will also be determined by feasibility of these business models, because these are all plans, castles in the air right now.
Correct. We don't know whether it's going to actually add value to the final consumer who's going to avail this service of a lounge or a lifestyle thing or whatever.
Yeah, but you can fairly sort of say that because they've done it in the past, they have a steady tech platform and they've got relationships at least on one side of the equation.
Right.
They should be able to, in the long term, at least recover from it at some point in time. But is that point in time visible and something you should dip into right now? No.
Fair enough. I think it's a fascinating story, and I'm pretty sure, I'm quite sure it's rare, right, that monopolies just lose 90% of their market share. I don't think there'll be too many examples of this.
I mean, unless the technology goes obsolete or something like that, it doesn't quite happen.
Fair enough. If you know any monopolies that have gone bust, please let us know in the comments. But I think that's it for this week. Thanks a lot for listening. Please like, share, subscribe. Let us know what other companies you'd like us to cover next. See you.
Disclaimer. This content is for informational purposes only. None of the stocks, brands or products mentioned are recommendations or endorsements.